The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, this is of course the last market day of June. It is also the weekly last day of the week. Let's go through what we wanted. I said yesterday we would spend a little more time going into detail on the longer term outlook, meaning weekly, monthly charts. Here we are, the Dow's up 240 at 24,465. It's just touching the 9-period exponential moving average of 24,456, up 241 right now. Stalled, went a little higher. It's stalling right at that level. It needs to clear the 14-period moving average of 24,552. I'll be impressed if that happens. But in the meantime, there's a pattern that we're looking at in the weekly chart, and that's the lowercase h that goes to a lowercase m. There it is. There's that little template. You can see it there, a little small, but you can see it. And yep, we saved the day by coming off the 23,997 low of yesterday, right at the 200-period moving average. Look at this. I love these techniques. This is something that I've spent ever since I've been here, since 2003. I think it was March of 2003. I was here before that. My newsletter started in March of 2003. I've discussed, 15 years? Wow, time flies. I've discussed these very issues, the 9-period moving average, the different moving averages, the 200-period moving average, the MACD, the stochastic, and what it means, and the reason why, using the Chapman wave technique of identifying the fourth highest peak. Yes, there can be other higher peaks, but it's at that fourth highest peak, peak D, alphabetized A, B, C, D, that fourth highest peak, where other things can happen. We made a high at 25,402. On the 11th of June in this last rally attempt below the 26,616 all-time high back January the 26th, right? Move the chart, keep going, right here. See that? Oh, stop. Put the brakes on. Right here at 26,600, stop already. On the 26th of January at a peak D. And now what we're looking at is there was a very sharp 12% grind to the downside towards the 200-period moving average at 23,360. There was a rally up to 25,800. A decline on February that was February the 9th was the 23,360, and then 23,344. That was April the 4th, April the 2nd. On April the 2nd, and that rally from 23,344 took us to where we are most recently at the 25,402 level on the 11th of June, peak D once again. How many Ds are just amazing? We went short the very day after the high was made, because we had a good feeling that there would be a peak. It was a leg D. We wanted a peak D. Now what we've got is a slide to the 200-period moving average. This time we hit the 200-period moving average yesterday with a low of 23,997. On the way down, both for the Dow and the other instruments that we are short, I said, let's take profits at different levels. We still have a core position short the Dow from that very high, and just like 100 points off the all-time high, maybe less. And then what I had said was, this is a counter trend bounce. I don't want to play it wrong, at least for the moment. All I'm thinking is it's going to make another arch formation. I'm going to get into all of that. I want to go straight into the numbers. We'll talk about the weekly chart, the monthly chart, and all of these different important key indices. Let's go. So the Dow right now is at 24,470. It needs to clear to a close over 24,554. It's in leg A. It's a gray leg A. It needs to clear that decisively. And the stochastic is still at 12%. That is, you know how I've said for so long that when, look at this monthly chart, when the monthly chart had that stochastic in the mid 90% area, I said, that is fabulous, because above 80% is good. Above 90% is really good. In the mid 90s is fabulous, especially going to 97, which just went to about 2-3 months ago. That is excellent. Now the stochastics is 64%. The MACD, well, it's going to be safe today. It is up. Yeah, it's up. Yesterday it was up 8. Now it's up 29. So that's so far so good. The MACD has not crossed negative yet. If it had closed negative today, I would have just said flat out, watch out. Now I can say let the balance continue a little while longer, and that arch formation that went to an M formation in the template of the weekly chart is absolutely critical, because if there's a close above 24,850 in the next week or two, then I have to say, you know what, we're done with the consolidation. Now we're going to go back and test the highs. I don't think that's going to happen. S&P. S&P is right now up 23 points at 2739. A little bit better. It's above the 9-period moving average, testing the 14-period moving average. Gray leg A. MACD's flat. Nothing there. Stochastics a little better than the Dow. It's at 19%. It's nothing to see here, folks. Not yet. If the technicals really improve, it's going to suggest that that weekly chart, which is held very nicely in the Chapman wave inside track, I'm going to call it for now, propellant zone. That's good. I'm not going to deny when something's not good. It is looking good. And the monthly chart has a potential for a right shoulder failure, but right now, not a bad candle at all in the S&P. Levels to watch in the S&P are going above 2753 would be really good in the next day or two, closing above that. Suddenly falling and going back under 2722, I would say, struggling like crazy. QQQ, Index 100. Trading vehicle, this is the Invesco. When did that change? I always have Power Shares QQQ Trust Series. I guess that's what it's called. Trading up $1.14 at 172.34. Tried to rally, touched the 9-period exponential moving average, failed. It's in a sell mode in the daily. Weekly chart is still in the buy mode. Nothing yet to see there. Still very strong. But I'm suspecting, having looked at so many NASDAQ stocks over the last week or two, that some of them are really toppy, and these are key factors. So I'm watching this, a break under 171.30 in the next day and a half, in the next week would be it's a holiday. By Wednesday next week would be very negative. The IWM, this was the leader on the upside. Up 51 cents right now, up 0.31, Dow's up 1.04, S&P's up 0.82. This is a laggard. And it made a top at 170.20 on the 20th of June, a peak E. Had made a peak D, went sideways for 3 bars, 3 days. Broke to the upside, and then gapped up to that peak E a week ago. I said no, over a week ago. I said, no, I don't like this. This is an opportunity to short right at the top, which we did. We remain short, and this is one of the weaker indices in the daily. The weekly chart is good, but I'm watching it very closely. Monthly chart is still really good. I'll be back straight after these messages, and we'll start getting to the nitty-gritties of the longer term. Basil Chapman, Tiger Editions Hour. Dow's at 244, S&P's at 21. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oops, what was that I just took out? All right, so for traders, look, the 10-minute chart has produced that pattern that I call the Chapman Wave falling axe. Lower highs, especially when they parallel like that. Lower lows, make it real simple. Is a 2740 in the E-mini, S&P E-mini. Needs to push and hold above 27, it's at 2741. If it can hold for 2 10-minute bars above 2745, that'll portend another burst of energy to the upside. At any point, if it breaks 2735, support, watch out below. Okay. Let's get back to this. So I was asked quickly about OSTK, which is overstock.com, online products. I mean, I kind of understand what they do, but I'm not sure about the business model, etc. All I'm doing is I'm looking at the monthly chart, made a peak D at 89.80, has an Eiffel Tower look that's straight up, straight down, looks like an uppercase A. It did stop in the 30 to 29 support area. 2765 is the 9-period, is the 200 period exponential moving average weekly support. I think it's going to touch that. Look, we've seen so many of the charts. You know, this propeller shaft comes down sharply, goes sideways in an H2M pattern, more like a rectangle, breaks the low. If there is a close under the 200 period moving average of 2765, let's just say it's trading at 3352. In the next week, if it suddenly has a decline, and that decline takes it towards the 27s, that's 5 points lower from here. I'd say be really careful. I'm looking at this as a potential for the upside because it has online products. I mean, must be a good business model. At some point there was, but I couldn't do anything now, even though it's gapped up. It's up 360 at 33.50. It's up 12%. Very good pop to the day, but it was much higher, and now it's kind of in the middle part of the range to lower part. Okay, so let's go on. We want to look at gold. Let's see. Gold is now up Gold is up $3.50. It's at $12.54. It made a lower low today. It just keeps making these lower lows. The MACD is still negative. Stochastics flat at 7%. On balance volume is trying to rally. The weekly chart is quite a bit of work. It could rally some over the next week, but it's ready at 12.54. It needs to close above one day above 12.64. It needs to close above 12.65, and then it could pull back for no more than a day, and then it has to punch into the 1271s or higher area. If it does that, I'm looking at the dollar probably then taking a bit more of a breather. It's had a really nice move. It's down 75 cents at 94.59. Weekly chart looks really good. Daily chart doesn't look all that good, but I'm suspecting that it should hold the 94s. It's at 94.59 right now. We'll see what happens over the weekend. It's going to be a very interesting time for the dollar. Now the next question. Let's go crude oil. So crude oil is up again, up 52 cents to 73.97. On the one hand, this is a good sign because using a lot of crude means that we're building activity. Well, the business activity is pretty good. At least that's the way it usually looks. Leg F in the weekly and a leg D in the monthly. Very nice action. As I said before, once it took out the 72s, I just had to say, you know what? Probably going to retest the last high, and it did. 72.69 was it? And now this week, this is a really nice candle, the breakout candle, but the MACD hasn't crossed positive, and the stochastic hasn't closed positive. So I'm just saying, at this point, 74.50 to 76.20 would be the next resistance level, but on the downside, 72.20 to 71 to 71 is probably going to be key support short term. TLT, here we go. TLT trading up 14 cents, extending that leg D, hitting the 200 period moving average in the monthly chart and the weekly chart. That's the orange line right there in the middle. This is going to be very interesting. How much further can it go? I haven't got the yield charts up, but we'll look at it this way. TNX, as I did yesterday. The TNX right now is down 5 cents. It's in the lower part of the range. Remember that diamond pattern that I spoke about? But it's gotten into the middle of this wick. Let's see what happens. My thinking here is that the real test is how does it hold if it closes underneath the low of the week of the 1st of June, under 27.59? What happens between there and the low that was made the week of June the 4th, April the 4th, April the 6th, at 27.17? So let's make it real simple. If the 10-year yield closes under 27, the TLT should actually start to increase, even though it's related more to the long-term yields, and start to get into I'd say to subscribers in the 123s. That's going to be very positive for the TLT, negative for the yields. So I think I've gotten everything. Oh, high-grade copper. Let's just do that real quickly. High-grade copper trading right now down 0.05. Test right on the 200 period exponential moving average of 2.96. Whoa, this is going to be very interesting. Okay, so I've done that now, and let's go to what I want to do. I'll get to questions a little later, but let me just do this. In the context of the markets, we'll start off with the Dow. You see this chart right here? This chart is one that I show subscribers periodically, very periodically. And the reason is there's a pattern that I used to speak about a lot. We haven't seen it that often, but it's called the Chapman Wave Stalk Leg Formation. Real simple. It looks like this. Here's the template. The price goes, it doesn't matter how many legs to the upside. It goes in one long leg to the upside. Then it goes in an oval pattern. The idea here is it has to be an oval pattern. And that oval pattern says, I call it the body. And there are different connotations what happens if it breaks the body low or the body high. And eventually what happens is it breaks out after that oval pattern. Can't be a rectangle. Rectangle has a different implication. And it starts the neck. And the neck can be very short. I've seen a neck where it's gone from a peak D in the body and just goes to peak E by pennies, and then it turns down and comes down sharply. There are a whole bunch of connotations of what happens when it breaks down and goes under the body, the price. But the neck, once in a while goes beyond what would normally be anticipated in the pattern that we look for. After all, find the neck to be way longer than the leg. The necks are usually shorter. When the neck is actually longer, when it's like a one-to-one, and whoa, what happened here? It's expanded. I get a pattern that I call the Chapman wave propeller shaft. And that's not normally an oval, that's more like a rectangle. But in this particular instance, everything about the move says that this is the propeller shaft that goes up and barely has a moment's respite. And eventually when it does, I have to do an analysis because it's so rare to get the two combining. I have to do an analysis of what is this the head that is going to take it all the way back to the body. That's 18,351. We're 24,476. Or is this going to be an up higher level sequence of yet another body formation? I'll be right back. 1,259. Be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So that was the Dow chart. Look at this chart. This is the S&P. You see these incredible up channels in the 1990s, right to the 2000 high, March 2000 in the S&P, makes a kind of a double top, and then it plummets down. It goes to the 768 level after hitting 1552, gets cut in half. Down channel, beautiful down channel. Beautiful up channel from 2003 low, 2002, 2003 low. It was October of 2002 at 768. Goes to 1576. And that was the high in 2000 and, right here. That was October of 2007. 1576, doubles. Comes back, more than doubles. Comes back down, plunges, halves, 666. That was the March low. Was that the Friday the 9th of March low? The Dow made us low on the 6th. Remember, we managed to buy that. Okay, so it comes in another. Look at that beautiful channel. Look at this beautiful channel. And then out of the blue, you get your top at 21,034.72 on the 20th of May. Oh, it was May because it's a monthly chart in May. Pull back to 1810. That was the most severe correction we've had since the low that was made back here in 2011, October 2011. Took time and price. So it gets from 2134 to 1810. That's 440. That's a big move. What is that? 20? That's a 20% move. And then what does it do? It goes peak A, peak B, and that low 1810 took out the up channel support. Then it went pop right back in, and it started a new accelerated move that went from, say, a 45 degree to about a 58, 62% degree, right? That's 62 degrees on a percent, it's a degree. And now what we've done is established the peak D at 2872. So we've gone 1,000 points higher. And in January 26, we make a top, we come back down. Now we've tested this big, thick, dashed red support line. That says over the next 4 weeks, 5 weeks, 6 weeks, I'd say go in the summer, the support of, so this is a new month coming up. So support at 2,600 is just going to be imperative to hold. That's 200, it's like 2,500 points in the Dow, 2,600 points in the S&P. That's key. And at this particular point, now talking monthly charts, what we're looking at is, right here. What we're looking at is that the monthly S&P technicals, the 9-period moving average, I'm wrong, the 14-period moving average of, right there, 2597, remember I said 2,600, so that's really important. The price is above the 9-period exponential moving average. It's made a peak D. It's used up 5 months. 1, 2, 3, 4. 5 months so far in the correction. Not much price, but a lot in time. That makes it real simple. If in July, at any point on a weekly basis, there is a close, let's go to the weekly chart, just giving you parameters, I think it's very important. If there is a close below 26, I'm going to make it a little lower. It should be 26, somewhere around 2665. I'm going to make it 2660. If there is a close below 2660 at any point, for whatever reason, I don't care, 1 week close, that monthly chart is going to suggest very strongly to me that the 9-period moving average of 2597 is going to be tested in July. If instead there's a push next week into the 2,700 points higher, 2766, 2772 area, I'm going to have to say, you know what? There's a chance we're going to go back to the highs. I don't think that's the case, but I need to tell you the parameters. Now, the MACD in the monthly chart is still strong, but it's getting narrower. And the stochastic's very weak at 65%. I shouldn't say very weak. It's weak. It's in the 65% area. Unbalanced volume is very strong. The weekly chart at 85% in the stochastic and the MACD just about to turn negative, something to watch. Those are the parameters. Just make it real simple. Let's go to the strongest one. Let's go to the IWM and I'll tell you what I'm looking at to see whether or not there's a chance that we make a new high, whether this is going to be really a peak B going to a C, or whether it's going to be that alternate count F. And I'll tell you why I'm calling it a chance now, as I said yesterday, of an F. If at 161.39 with an all-time high of 170.20, if there is a close in the IWM, the iShares Russell 2000 ETF, a close on a weekly basis below 159.50, that's a real problem. let's make it real simple. Any push below above 166.30 says, hey, don't rule us out for retesting the all-time highs. I don't think that's going to happen. I wanted to give you what I'm looking at. Now, that's enough with those things because I think that's the bigger picture. But I have to now include the XLK because the XLK has enough of the really important taxes, the Select Tax Spider Fund, trading at 69.79. It made a high. Look at this. It made this high right here, a 2-bar reversal, 72.43. 70. Oh, it's parallel. 72.43 times 2 at a peak G in the daily chart. Comes around, makes an arch. Really struggling here. I'm very cautious now on the text. And I think that if there is a close at 69.79, if there is a close on a weekly basis below 67.70, I want it underneath 68. That's gonna be for me a hint to suggest that the 9-period moving average of 63.20s actually is going to be tested in July. I am wrong. If Friday a week, today a week, you're looking at this and it's trading at 71.35 to 71.55, that's going to say, nah, we're probably going to make a leg D before we come down. Just make it real simple. Now, I had a couple of questions that I'm going to get to. Let me just get rid of this right here. Okay, here we go. I'm going to go backwards. The New York Stock Exchange, NYA.X. Yes, bouncing up 0.87% and up 108 to 12,584. Made an all-time peak E high 12,889, 12,888. Yeah, 12,888. And that was on the 11th, I believe. And now there's a real problem because that weekly chart is very weak. The WEEK is WEAK. And that monthly chart is just walking the 9-period moving average. It's really having a rest. It's like it's got its little bench. It has an incredible move to the top of the peak D, and now it's just having a rest on the 9-period moving average in the monthly chart at 12,583. A close below 12,200 at any point. No, a close below 12,150 at any point in the next month. Very negative for the new. No, I shouldn't say very negative. It's very negative because it's affecting the monthly chart. Very negative will be if there's a close well below 12,000 in the weekly chart, you get your 1-to-1 to the downside. Basil Chapman, Tiger Technicians Hour. Watching this counter trend rally unfold. We'll be back straight after these messages.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So it's the IYC, the iShares U.S. Consumer Services that I'm really looking at. Makes a high of 200.46 on the 21st of June. Comes down very sharply to the 192s. It's 8 points. It's for this thing, it's kind of sharp. But that's not the issue. The issue is that it's made its double top in the weekly chart. High of 198.53 on the week of the 2nd of Feb. And a high on the a test of the high and breaks above it. And it actually closes a tad higher when it made the high of the 21st. So I'm watching this, and all I can say is that if the IYC, trading 194.76, up 82 cents, at any point in the next 2 weeks closes on a weekly basis under 189, that's not, it's at 194 right now. So that's a little bit of a way to go. But if it does, that weekly chart suggests that it could go quite a bit lower after that. So I'm watching this very closely. Now, there are a couple of things that I need to just talk about. In the den, there's a whole conversation going on about tariffs and all sorts of things like that. Very important. But look at the date. If I can find it, where'd the date go? Right here. The Reciprocal Tariff Act enacted, when do you think it would be enacted? June the 12th, 1934. So I've done so much work on all these things, the different pieces of the legislation, when they occurred, not the actual legislation, but when the bank regulations. And my contention way back when I wrote this really big paper, it's actually a very big article on the mega bull market still to come. This was written in 1986, and then we had the crash of 87, but I still put it ahead. And it was asked by Barron's, had asked me to, me and my partner at the time, to elaborate, and I wrote a huge article on it. And it was just so optimistic that they refused to. They just said, what are you talking about, mega bull market to come? So obviously for Barron's, it was just way too bullish. But those things are all absolutely relative to the cycles. And what's really important here is that the acts, my contention has always been that acts get voted on through legislation, but the politicians never do anything until they see what's happened. And then after the horse is out the barn, then they're waving their hands. We have someone here in Massachusetts who just epitomizes everything about that expression when the horse is out the barn door. But what's really important is that the legislation is for decades later. So when was that, all the legislation of the bank regulations and everything about it, when was that undone? In the 1990s. Remember with Clinton, he kept on doing it. I remember yelling and screaming, saying, wait a minute, the banks are now involved in real estate. Everything had to be separate before. Now all of a sudden, it's all tied together. A horrible mistake. I still think that the expression remains the same, and that remember Dodd-Frank, the two people that were waving their hands and shouting and screaming all the time, everybody should have the pleasure of owning a home. Of course, never ever saying, has anybody owned a home and put in a new roof, put in a new toilet, put in a new sink, got a plumber? No, they just said everybody should have a home. And look what happened. And then these are the guys that write the legislation. Like, who was the fox that let the chickens out of the coop in the crash of 1929? It was the Rockefellers and the Kennedys, and these are the guys. And then who gets to run the SJC? What is it? SEC? Kennedy. I mean, that's the way it happens. It happens over and over and over. So 1934. What are we doing now? We're loosening the tariffs. At some point, it comes back and just kicks you right on the shins. It's the way it works. I don't know. It's human nature. Okay, enough speeches. IYC, watch it real closely. Now, this is going to be very important. I had a couple of questions, so I'm going to go through some of the questions. I'm going to put into the context of the bigger picture. Within the context, question, Basil, if you think market will eventually make new highs, then POTUS tariffs will turn out well. I'm going to talk about that. I've been able to chew on this for a while now without saying very much. I like to do that. I like not to make a statement and then have to convince myself about that statement. Rather let the statement come out through chewing on this and just thinking it through as carefully as possible. I believe that I thought it out correctly 2 years ago. I'm now convinced that the structure of what I'm looking at is correct. It's putting these pieces together. It's really tricky in timing. So nothing else but timing. So we'll see. I'm not going to rush into that. So yeah, it's a good question, but I'm not going to deal with it now. So IYT, look, this is when the Dow transports the semiconductors, the Dow itself and the S&P failed on this recent rally to get to all-time highs. It was saying to me, watch out. These have been leaders before. They're failing right now. Keep it in mind that could become an issue. That's all I'm saying. And it's a reason why I wanted to keep our short positions, even though we've taken really nice profits. Even yesterday morning, I said, take a little bit more off. Let's just, we can always put it back on a big bounce if it comes. So that's that's what I'm looking at right now. We have not gone long. It's unusual for me not to have jumped on the bandwagon saying a gap up today and maybe a gap up Monday would be really positive. I'm really suspicious of this phase right now. Here's another reason why. See, I did the IYT. Look at the XLF. Historically, the banks have usually done pretty nicely in bull phases. They've been stalling since when? Since January of 2018, when the XLF made a high of 30.33. Yes, I like to put it together of B and K. Is that IBNK? I hope so. Oh, gee. All right, let's go with SCHW. So Charles Schwab, I like to put it together with the brokers. And now you've got Charles Schwab makes a peak D last month in the monthly, and now it's pulling back very sharply. This thing should be screaming higher if we were going into another bull phase right now. And it's not. Next one is Ameritrade. I think it's, what is it called again? The full title is, oh no, AMTD, is that correct? AMTD, hit the button. Yeah, TD Ameritrade hits the 200 period moving average. This is not a good chart. It made a peak C1, C2, 63.01 in March was the high, 62.99. Misses by 2 cents, got a peak C1, C2, should go to a leg D at some point. It needs to breathe. TD Ameritrade Holdings trading at 55.40, down 4 cents, pulling back. I suspect I want to have a real good look at it at 55. If maybe this in the summer it gets to the 52 to 49 area, 52 to 49 area. I don't know if it will. I'm just saying that's kind of what I like to look at. They are the ones for the next vote. Goldman Sachs down 71 cents. So the bank stocks got this big boost yesterday. JP Morgan, what is that? Still up? Up 74 cents. Okay, it's giving back most of the gains. not a good looking weekly chart. Monthly chart says peak C. It's probably going to go to a D. Okay, so I did some of those things. Some of those were questions. Let's go to Boeing. Boeing, as I say, I don't care whether it's bouncing now or not. I think Boeing is in a consolidation in the arch formation that should go to a W formation because it took out halfway through the left side lip and bottom of the cup formation. Yeah, it's just consolidating. Any questions? I've got a bunch of questions. I'll try to do them as we go into the break. Folks, I'm going to do a lot of work for my subscribers this weekend. My opening for subscribers, we're looking at the...
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
You see, to smash down so sharply for days and days and days, and then look at this 10-minute chart of the E-mini. To not be able to sustain a big move, make another peak D right there at 27.45.50. Now we're at 27.36. This is crazy. I mean, the market yesterday should have been up. The Dow should have been up 180. The S&P should have been up about 24, and today should have been the exact same thing. I would have said, "Wow, I'm sorry I didn't get completely out of the shorts. We should have switched to the longs." Instead, I thought, should we get a trading position now? I don't know if I want to get my head mixed up. Got the short position perfectly, right at the exact tops. I don't know if I want to mess with my mind with that because I don't see sustainability right now. Could be wrong, but this is the end of the month. This is where buying. Oh, I meant to mention this earlier, the whole week. I think I did mention it once the week before. I said that I've been around in June where June month candle looked horrible. And then either it was Thursday or Friday, whatever it was, the last day of the month, it just took off unbelievably and changed the candle completely. I don't see how this is going to change the candle for my work. Look, this is a monthly chart. Yes, Triple M I was asked about. Let's go to the S&P, SPX, and X. Look, the monthly chart is the MACD is turning down, still good, but the stochastic's very poor. On balance volume is good. I'm looking at this and I'm saying, wow, I don't actually see follow through to the upside based on the candle as it's closing right now. So I'm just a little cautious about this. It should be so easy at 27.33 to pop to 28.72. If you're looking at a monthly chart, looking at the cup formation, it should scream to that. It had its opportunity, and so far it hasn't done it. That's what I'm saying. So I'm still very cautious. That doesn't mean to say I'm talking smash. I'm talking about a sideways consolidation, which is still rotational in effect. When it becomes a combined thing, and all the indices, like on Monday, all keep coming down at the same time, that's when you can get a much deeper correction. Right now, let's just say that it's consolidating huge gains. That's the way I'm looking at it. Be very selective. Stay tuned for Steve Rose. Stay tuned for Dave White. Stay tuned for Tom O'Brien. Have a wonderful weekend. Please check out my opening call over the weekend. Money back guarantee. And it's really full of information. Go starts coming out Saturday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.